Well, hello again, everyone, and welcome to the Options Mentor. We've had a pretty big news week. We just got through with the PPI and the CPI, and now we're coming into the actual Fed announcement. The Fed will announce their decision on rates this Wednesday afternoon at 1 Central, 2 Eastern. And it's the last I saw, it was over a 90% chance the market believes that they will pause and not raise rates. So needless to say, if they do raise rates, we probably have a pretty decent sell-off. I wouldn't be surprised if the market went down 60 to 80 points if they decided to raise rates. But the Federal Reserve does not like to surprise the market like that. So it's very unlikely that they'll do that. There is some fear around about it because both the CPI and PPI, which are inflation numbers, both came in hot. So there is a fear of that. My guess is they probably won't raise rates, but they may make it pretty clear that if they don't see some big changes soon, they'll do it the next time. So I think you could have maybe a mixed reaction from the market. A lot of times what the market likes to do, it seems, is kind of what they call price in or bake in, whatever they think the Fed's going to do. So if the Fed does pause, like the market mostly thinks, then most likely we could have a little bit of a rally, but I don't think it would be a lot. And if you look over here, we're going to go over here and look at a VIX chart. Let me share my screen. So here is a VIX chart on your screen, which is a CBOE volatility index. The more fear there is in the market, the higher the VIX will go. It has a measurement system you can look up online. Roughly people buying calls, buying puts, selling calls type of thing, where you can see that the market participants are getting a little fearful. Right now, you can see it is at 13.79, which we haven't been this low since before COVID, back in 2020. If you can believe that, early 2020 is the last time we've been down here. So volatility is, as the recent past goes, very, very low. So I think the most natural trade for us to be in would be one of our long Vega trades, meaning that generally we would benefit from volatility going up. So if we go over here to SPX, what I think might be an attractive trade for this week, sometime before the Fed announcement, of course, tomorrow, Tuesday, whichever day, is to go out to a week from this coming Friday. So not the 22nd, but the 29th. Because so many times if you pick the 22nd, in this case, which is the week that the Fed announcement comes out, and you'll have the volatility actually outpace your theta, because the volatility in that short for the 22nd will remain elevated, which makes it hard for you to see your time decay until after that Fed announcement and the press conference following it, by the way. So I'll be Wednesday afternoon. So what happens is if you're in a trade that expires this Friday and it makes a big move off of that, it can be very difficult for you because you're only 2 days from expiration when this news comes out. However, if we go out to the next week, now we have all kinds of time. We can deal with making an adjustment or dealing with our trade if we need to. And what I'd like to do is go out there and put on a double calendar. Now, what I modeled here is about 40 points below the market and 40 points above it. Of course, this is Sunday. The market's closed at this time, but we closed at 44.50 on Friday. So wherever the market is, if you decide to put this on, I would try to go roughly 40 points above it for the upper calendar and 40 points below it for the lower. Now, I have this model as two separate calendars. You can absolutely put it on as one double. And I will say this, my experience has been, don't try to, what you might call game the system by, I'll tell you what I'm going to do. I'm going to put on the call calendar because I think, we're going to go higher, and then I'll slip the put calendar in because it'll be cheaper. What happens a lot of times is it ends up disappointing you. And if you say, for instance, put on the call calendar and we come down at all, now you're going to pay even more for that put calendar. So if I were you, I would put the trade on. If you don't want to do it all at once as a 4-leg double calendar entry, at least, like boom, send the call, boom, send the put. So they're both out there at the same time. and you get fills that are relatively close and not something where you're trying to hope the market moves your way. As we call it, hopium. It's never a good thing to be on, right? Hoping that something happens. You want to give yourself the best chance, and that's by putting on the right trade at the right time, at the right levels. You want to do that rather than hoping something. Or another dangerous thing I've found is when you think something's going to happen. That can be bad. I've seen that a lot myself, my students, where if you, I think the market's going to go lower or higher here, just trade your trade. Put on a trade that benefits if it moves around, if it stays, fairly close without any huge moves. And I think you'll generally be better off than if you try to predict the market. Everybody likes technicals. Technicals are fine to look at, but I don't use them to dictate my trades. They might make me think about things sometimes, but technicals are another thing that very often don't work out the way they're supposed to, right? You say, oh, look, there's resistance. Oh, boom, the market blew right through resistance. So be careful with that. But what you have here is a double calendar, 40 points below, 40 points above. I'd be looking to get 10% on this trade and then get out. You can even take 7 or 8%. I think it's fine. Now, if you look at where it's priced here, if you put both of these on, it's going to be, what is that, a little bit over $800, $440, $355. So a little over $800, may even be $9 by the time you put it on. Who knows? That's fine. Don't get hung up on it. If you say, hey, Mark, you have modeled at 8 something, this thing's almost 1,000, perfectly fine. You can put the double calendar on anyway. But if you look here, I can go forward a day at a time, and all this will show is what theta will do for me, right? So if I just go up here, let's go to Wednesday, which is the 20th. Now it says, hey, I'd have all this money already. You can pretty much bank that it won't be there, not Wednesday morning. You won't have this kind of time decay because you'll have it, but you won't be able to see it because right here, this Vega number will overwhelm the theta number, meaning that the short for even a week from Friday is going to be elevated a little bit, and it won't end up coming out the way it says here until after that announcement. So by Thursday, if you go to Thursday, it says we could be up $175. I absolutely believe that. I think there's a possibility that we could be up that much on Wednesday afternoon, but it'll have to be after a little bit of the press conference and, of course, the rate announcement. And then you might be able to get out of this trade Wednesday afternoon at 8 or 10%, or Thursday, or certainly I would think by Friday, unless we move all out of whack. So this is a trade that is for a week from this Friday, but I expect to be out by this Friday. Does that mean I get out if I want? No, you don't have to automatically get out unless you get your profit that you want. So if somehow we get to Friday and you're still not profitable or got 1%, you can take it into the next week. It's fine. One other thing I did here, a lot of times I do these with 3 days wide. This is actually 4 days wide, meaning 4 days between the short and the long. What that does is give us just a little faster theta. It does give you a little more vol exposure and will cost you a little more. So let's look at this. What if I did do 3? If I do 3, we have $54 a day, almost 55 in theta, and 83, 82 Vega. Now, if we just go 1 day more to the 3rd, now we get $61 a day in theta, and of course more Vega. I like this. I think it's I think it has a great chance of us being out of it this week. That's a solid trade, I think, for a very low volatility environment, if you compare it to the last 3 years. So that's my idea for this week. As always, make sure you tell your friends about the page here, the YouTube channel, and make sure you like the videos, comment on them. I do get back to you on the comments. So, and also that notify. You always want to be notified when I put out the videos. If you hit the notify, you'll get that. I put them out anywhere from Friday afternoon to Sunday afternoon normally. Either way, the market's going to be closed by the time they come out. So they'll come out over the weekend, but if you want to be able to see it right when it comes out, just hit your notify button and subscribe, and of course, you'll get notified about it. So have a great trading week. I hope things do well for you. We'll probably see even more volume this week with FOMC, and now we're getting back into trading from summer, a lot more volume. So I'll talk to you guys again next weekend. Have a good one. Bye-bye.